What's up, YouTube fam? In this video, we're going to discuss how to overcome potential losses and how to make your trading essentially risk-free when you're talking about selling options. So in this case, obviously you guys see that I'm down 140 for the day. Well, first things first, we're not actually down anything. Now I know what you're saying, Jared, I see it's down $120 at this moment. How could you say you're not down anything? Well, let's just look at the position, right? So obviously coin or con L is at 57.7, but our strike is only at 55, right? So what does that mean? It means that as long as it's above 55 by the end of the day Friday, that we will get our, right, 4 times $1.54. So we will get our 300, we'll get $608 as long as it's above $55 Friday. So with that being said, at this moment, yes, it's saying we're down 160. That's only if we wanted to close the position right now, right? If we didn't want to wait till Friday and we wanted to get out of the position early, then yes, we would lose $160. But at the moment, we're technically not down a single penny. Now, there is a little bit of a dilemma here, right? Because obviously I've been talking about this position I've been wanting to take, which is on MU. Now, as you guys know by now, MU has earnings tomorrow after hours, right? So if we look at MU right now, you're going to see the premiums, they're going to be very pretty for expiring on Friday, right? Usually in this case, these would not be even a fraction of this price, especially for 3 days out. But since it has earnings, that's what's making it appealing. That's what's driving the premium prices up. Of course, you have Nike as well this week, and you have Carnival Cruise Line, which are all appealing plays. But as long as we're down in this Coinbase play, I don't think it would be worth closing for the earnings positions, only because this $100 that you're down, as long as you hold in the position, it comes back very quick. As you guys see from the moment this video started, it's been like 5 minutes, or not even, probably 2. And we already went from being down, what was it, 140 to 116. So in a lot of ways, staying in a position that's down will allow it to recover a lot faster, as opposed to if I wanted to close it for a new position. Now, if I thought, this position was absolutely dying, and I thought, crypto was tanking and, we were screwed, then yeah, maybe. But in this case where, it bounced perfectly off our strike, which is funny, I said this in a previous video that, a lot of times strike prices are used as support and resistance in the markets. So when you actually combine it with, putting your strike below a low, you'll see this happen very frequently. And if you've been following this channel from the beginning, you would have noticed that almost every time. So it's like, think about it like this, right? It could really go a couple ways, but if it goes straight up, then our put premiums would expire or become worthless very fast. But every time it's gone against us and gone down, basically every single time it's bounced off of our strike and came up, which was obviously good for us as well. And as you see, now we're only down 28 bucks, which again was my point, right? It's in a lot of times, if it's hovering near your strike and you're down money, then a lot of times you're better off just staying in the position, because it's going to recover faster than if you were to close and start a new position. Now, with that being said, the other beautiful thing about options, right, is let's just say this does flip bull for the rest of the day, then we're going to be up big on this position and be able to close it, very quickly at some point today. If it doesn't flip bull, right, and it just comes back down and then just hovers around, the good part is that there is something called Theta, which, if you're an advanced options trader, you would know what this is. So this means that by tomorrow, it will lose 45 cents of its value regardless, right? So let's just say it ends the day worth $1.54, which would make us break even, assuming that tomorrow when it opens, it's in the same position that it was when it closed. We will be 45 cents richer. Now that's $45 times by 4, which would be $180. So if it does decide to go bullish, then you're going to have that on top of, the put losing value. But if it decides to go bearish, you're going to have that in your favor as well. And that is why this game is the game where it's relatively risk-free, right? Why is it risk-free? Listen, there's no such thing as risk-free completely, but it's risk-free in the sense of, if you were to just buy this stock right now at $58.50, 100 shares and it went down 55, you would be down $300, right? $370 to be exact, 363. But if you were to sell puts, right, on a strike that's lower, now you're evading all of those losses, and you would only have to take, whatever it goes down below 55. So, is it 100% risk-free? No. But when you compare it to just buying and holding, and a lot of other strategies, it really does trump most strategies. Now, the key part of this is making sure you're doing it on stocks you can trust. And that's part of the strategy. It's a very big part of the strategy, right? Because if you're doing it on a stock that's going to absolutely dump 50% in 3 weeks, then yes, you are going to get wrecked. But if you're doing it on stocks that you've been looking into, stocks that you know enough about. Listen, when I say enough about, I'm not saying you need to know so much, right? I don't want people watching this to think they need to spend hours investigating. It's more of just like, making sure the earnings reports have been good, making sure the company doesn't have terrible news, making sure the company's not going bankrupt, right? Like just general understanding of what you're getting yourself into, right? If the stock's been around for years and you know about the company and it's something you would buy, then yeah, sell puts on it. I don't want you to just sell puts on something because it has the highest premiums on the market. I need it to pass your inspection of something you would buy first, right? That's the most important. Now, when you're sticking to things with higher market caps, it's just safer, especially when you're doing 1 to 2 week expirations. Because if it's, tens of billions of dollars, right? Like what's the Coinbase market cap? 78 billion, it's not going to go to zero in 3 days, in 4 days. So it's like, you're putting yourself in a position where, okay, yes, you might lose a couple bucks on an individual trade, but again, that's still going to be better than if you were to just buy it right now. Now, on the flip side, the real risk of option selling is the fact that there's going to be chances where you could have bought it and it shoots up and you would have made more. That's the real risk. Like the risk in this game is not as much losing money as just dealing with opportunities where you could have made more. And that's okay, right? Because what is Warren Buffett's number one rule? His number one rule of trading and investing is don't lose money. His number 2 rule is never forget rule number 1. So it's like, dealing with those moments where it's like, oh, you could have made more isn't a big deal, right? Like let's look at our year to date. We're up 5,200. We started with 20K, a month and a half ago. In the end of the day, being up 26%, there's very few stocks that you're going to buy and hold that are going to do that. Now, obviously, yes, we are in a little bit of a bull market. So, there's some stocks that are up that amount, right? But this is something that's going to consistently produce returns, even if it goes down from where you take the trade, right? Like where I took this trade, Con-L was at like $60. So even though it's below where I took the trade, I'm in a position where I'm going to win this trade. And ultimately, I'm down $56. But as long as this continues the way it's continuing right now, it'll be break even and profitable in no time. And that's what I love to see. Now, assuming we get a big move, soon, I'm probably going to hold this position all through today, and most likely, assuming I can get some good profit by tomorrow, close it, and then take MU. But if we don't, I'll probably hold it till Friday, and ideally collect the 600. And if I have to buy the shares, I don't mind. Like this is not a stock that I mind buying. Matter of fact, when I started this journey, it was really to sell options on Coinbase anyways, which Con-L is the leverage version of Coinbase. I'm doing it because I can't afford Coinbase on this account, right? 31,000 is what it would cost. And obviously I only have 25,000. I think even if I could afford Coinbase, I do think it'd be worth it to do the leverage just because, you get a little bit more value, but obviously there is a little bit more risk. So that's the essence of the video, right? Is how to basically win, right? How to overcome losses and how to trade in basically the most risk-free way possible. Now, I know you're not always going to be 100% risk-free. It's physically impossible, but this is going to be, in a lot of ways, the most risk-free way to trade that you're going to find where you can still get big returns, right? Like I'm not talking 5-10% a year. I'm talking 10-20% per month while still being relatively risk-free.